Hello everyone. Today our group would like to present about money market instruments. We have been choosing three money market instruments. They are negotiable instrument of deposits, Malaysian government securities, and Malaysian treasury bills. My name is Temli, daughter of Nadia. My metro number is 259292. My co-presenter name is Ismail Hamze Abdi, 258301. Kasturi, daughter of Logidasan, 259068. Shalini, daughter of Tony, 259343. First is definition of negotiable instrument of deposit, NID. NID is a document issued by an authorized bank which certifies that a certain sum in ringgit has been deposited with the bank for a stated rate of interest with a specific maturity date. There are three types of negotiable instruments of deposits: short-term negotiable instrument of deposits, long-term negotiable instrument of deposits, zero-coupon negotiable instruments of deposits. So, what is short-term negotiable instruments of deposit? It is a tenor range from 1 month to 12 months. Minimum value Rm100k in multiple of 50k. Maximum value up to Rm1.0 million. Next, interest based on fixed coupon rate will be paid on maturity together with the principal. Next is long-term negotiable instruments of deposit. Tenor must be at least 12 months up to 120 months. Minimum value Rm100k in multiples of Rm50k. Maximum value up to Rm10 million. Coupon payments made semi-annually or quarterly, except for the first interest payment, which could be earlier than 3 or 6 months. Traded on price basis, quoted in terms of price per nominal value. Zero coupon negotiable instrument of deposit. Tenor must be at least 1 month up to 120 months. Minimum value Rm100k in multiple of 50k. Maximum value up to Rm10 million. Full nominal value to be paid by issuer at maturity. Traded on yield basis, example 7.05%, for papers with remaining maturity of less than 365 days, and on price, example 98.90 for papers exceeding 365 days to the maturity. What is meant by Malaysian government securities? Malaysian government securities are coupon banking long-term bond issued by the government of Malaysia to raise funds from the domestic capital market. Malaysian government securities can be issued by way of tender through the principal dealers or issued by way of private placement to selected institutions. For new issues through the auction, submission of bids will be on yield basis and the coupon will be market determined based on the weighted average successful yields of the issue payable semi-annually. The definition of Malaysian government treasury bills is Malaysian treasury bills are short-term government securities with original maturities of less than 1 year. Malaysian treasury bills are issued by Bank Negara Malaysia on behalf of the Government of Malaysia on a discount basis, and the holders are paid the nominal amount on the maturity date. In the primary market, Malaysian treasury bills are issued through the weekly tenders via the principal dealers. In the secondary market, Malaysian treasury bills are also classified under bank trading. Purpose of its creation for a short-term negotiable instrument of deposit. Generally, the money market deal with short-term instruments, and its function is to bridge economic units temporarily to minimize the gap between their cash receipts and payments, such as providing liquidity. As such, the Islamic money market can provide short-term capital injection to deficit units and at the same time to offer mechanisms for investors to place them surplus funds. The Islamic money market, like all financial markets, provides a channel for the exchange of financial assets for money. The Islamic money market is the mechanism through which holders of temporary cash surpluses meet holders of temporary cash deficits. Purpose of creation for long-term negotiable instrument of deposit. Deposit certificates used in the wholesale money market that are regularly purchased and traded by the institutional investors and high net worth individuals in the stock market. Zero coupon negotiable instruments of deposit. Coupon rate is the interest rate stated on a bond, note, or other fixed income security expressed as a percentage of the principal as a face value, also called coupon yield. Zero coupon investment means an investment that makes no periodic interest payments but instead is sold at a discount from its face value. The holder of a zero coupon investment realizes the rate of the return through the gradual appreciation of the investment, which is redeemed at the face value on a specific maturity date. The purpose of creation for Malaysian government securities. Malaysian government securities are risk-free marketable debt instruments issued by the government of Malaysia, sold by competitive auction and facilitated by Bank Negara Malaysia. The main purpose of government security is to raise funds from the domestic capital market to finance the government's development expenditure and working capital. Purpose of Malaysian government treasury bills. Malaysian treasury bills are short-term securities issued by the government of Malaysia to raise short-term funds for government's working capital. Bills are sold at discount through competitive auction facilitated by Bank Negara Malaysia, with original maturities of 3 months, 6 months, and 1 year. The redemption will be made at par. Malaysian treasury bills are issued on weekly basis and the auction will be held one day before the issue date. The successful bidders will be determined according to the most competitive yield offered. Normal auction day is Thursday and the results of successful bidders will be announced one day after. Malaysian treasury bills are tradable and on yield basis, means discounted rate based on bands of remaining tenure. Example, band 4 equals to 68 to 91 days to maturity. The standard trading amount is RM 5 million and it is actively traded in the secondary market. How it is created. Negotiable instrument of deposit. Bank Negara Malaysia introduced negotiable certificate of deposit and the banker acceptance in May 1979. Bankers' acceptance are financing instrument used to facilitate trades, while negotiable certificate of deposits are instrument used to amalgamate saving of the general public. Negotiable certificate deposits are believed to be able to overcome the shortcomings of fixed deposit because they can be traded through discounting process. Several vital developments have taken place in the negotiable certificate deposits market since the introduction of the instrument. Floating rate negotiable certificate of deposit was introduced in July 1998, followed by zero coupon NCD in February 1993. Today, negotiable instrument of deposit can be issued by banking institution and traded in the Malaysian money market consists of the following financial instruments. They are short-term negotiable certificate of deposit, long-term negotiable certificate of deposit, floating rate negotiable certificate of deposit, zero coupon negotiable certificate of deposit. Negotiable instrument deposits are instruments in various form. Example, the owner name is not written on the NID concerned. This is to facilitate some of the certificates from the depositors to third parties. Negotiable instrument deposit certificates are kept by the agreeable customization for security reasons. So next is for Malaysian government securities. Malaysian government securities were initially issued to meet the investment needs of the Employee Provident Fund (EPF), local bank and insurance companies. In the late 1970s and early 1980s, Malaysian government securities were issued to finance the public sector's development expenditure. In contrast, by the 1990s, the purpose of Malaysian government security issuance was extended to funding part of the government's budget deficit and prepayment of some of the government's external loans. The government continued to issue Malaysian government securities during the fiscal surplus of 1993 to 1997 to meet the market demand for Malaysian government securities. Next is for Malaysian government Treasury bill. Government investment issues and Malaysian Islamic Treasury bills, on the other hand, were issued to allow Islamic banks to hold liquid papers that meet their statutory liquid requirements. The issuance of these papers also enable them to invest their liquid fund in instruments that are issued adhere to Sharia principles, as they are unable to purchase or trade in Malaysian government securities, Malaysian Treasury bill, or other interest-bearing instruments. Thank you.
My name is Ismail Hamza Abdi, matric number 258301, and this is my part. Who are the parties involved? The parties involved in negotiable instruments of deposits are the issuer, the depositor, the investor, another bank, and another investor. And about Malaysian government securities, the parties that is involved is issuer, government, which is the government of Malaysia, and investors, and Malaysian government treasury bills. The parties involved in this is the issuer, which is the government of Malaysia, and the bidder. So what's the rights of each parties? In the NIDs, the issuer, his right is to help customers to collect the interest and maturity proceed. Right to keep all the customers' personal information. And about the investor, right to know the interest rate and date of maturity of the time of depositor agreement. And the depositor right to know the interest rate and the date of maturity at the time of issuer agreement. Another bank right to know the interest role and date of maturity at the time of investor agreement. Another investor right to know the interest rate and date of maturity at the time of another bank agreement. And in the Malaysian government securities, the issuer dominated in the nation's own currency, and the government cannot be compelled to default. When investors buy bonds, they become bondholders. They are entitled to receive periodic coupon or a return on the principal or nominal amount raised by the issuer and upon maturity. Malaysian government treasury bills, issuer have a right to issue MTB to raise short-term funds for government's working capital, and the bidder have a right to join the auction one day before the issue date. Normally, MTB are issued on a weekly basis. Bidder have the right to know the result of the auction day after. So what is the responsibilities and obligations of each party? In the negotiable instruments of deposits, issuer at the maturity state issues obligation to pay principal plus last interest due to the person who have deposit certificate, and the investor, when the depositor tells NID to invest, the investor obligation to sell back NID to the seller, to the issuer. And the depositor should deposit the amount as agreed by both parties. And then another bank, when the investor resells an ID to another bank at the maturity date, another bank obligations to sell back the NID to issuer. Another investor, when another bank resells an ID to another investor at the maturity date, another investor obligation to sell back the NID. And about MGS, issuers is responsible for guarantee to pay periodical interest payments and to repay the face value on the date. The investors are responsible for the investment returns to be fixed. Bonds will be unprotected if the government that issues them enters a fiscal crisis that raises debt, about whether debt obligations are on and the MTB investors is responsible to reduce risk and maximizing return. Corporate issues is responsible to issue bond to raise fund in short term. Corporate trustee is responsible for taking actions to protect the rights of the bondholder if an issuer defaults on interest or principal payments. So this is my part.
Hi, good day to my beloved lecturer, Inche Sharil. Today I would like to explain regarding risk to each parties. First of all, I would like to explain negotiable instruments of deposit NID, risk warning statement, own evaluation of suitability of NID or FRNID by depositor. Contractual terms. You shall have the responsibility to fully understand the terms and conditions of the NID or FRNID to be undertaken. The other risks for NID, such as transaction costs, bank under no obligation to buy its own NID or FRNID, price risk, investment risk. Malaysian government securities. Malaysian government securities carry little risk of default. They are not a risk-free investment, meaning that when interest rates rise, bond prices fall, and vice versa. As seen with Greece debt crisis, governments are not always able to produce more capital, and even when they can, it does not prevent them from defaulting on loan payments. But aside from credit risk, there are a few other potential pitfalls to watch out for the government bonds, such as the interest risk, inflation risk, and currency risk. Malaysian government treasury bills (MTB). Although government bonds carry little risk of default, they are not a risk-free investment, meaning that when interest rates rise, bond prices fall, and vice versa. As seen with Greece debt crisis, governments are not always able to produce more capital. Okay, now I would like to explain regarding the pricing mechanism. First of all, I would like to explain the pricing mechanism for negotiable instrument of deposit NID. The minimum nominal value of this instrument certificate is RM 100,000 issued at RM 50,000 per certificate up to RM 1 million per certificate. Okay, for Malaysian government securities, coupon rate calculated by the weighted average of active offers based on the value of comparable maturity bonds and the coupon duration. The competitive multiple price auction. The bids are submitted by principal dealers on a yield basis for new issues and price basis on the reopened issues. For Malaysian government treasury bills (MTB), MTB sells at discount price through competitive auctions which is facilitated by Central Bank of Malaysia. Successful bidders will be determined according to the most competitive yield tenders. Every submitted bid states the lowest rate of discount margin that the bidder or investor is willing to accept. In a competitive bidding auction, investors buy treasury bills at a specific discount that they are willing to accept. Alright, now I would like to explain regarding how is the instrument traded for negotiable instrument of deposit NID. A short-term negotiable instrument of deposit SNID at the nominal value which is in an amount of not less than 100,000 and in multiples of RM 50,000 up to a maximum of RM 1 million for foreign currency SNID. This requirement shall also be applicable in ringgit equivalent amount. Maturity period less than 1 year. Okay, for a long-term negotiable instrument of deposit LNID at the nominal value which is in an amount of not less than RM 100,000 and in multiple of RM 50,000 up to a maximum of RM 1 million for foreign currency LNID. This requirement shall also be applicable in ringgit equivalent amount. Maturity period more than 1 year up to 10 years. While for a zero coupon negotiable instrument of deposit ZNID at the nominal value which is an amount of not less than 100,000 and the multiple of RM 50,000 up to a maximum of RM 10 million. Maturity period at least 1 month up to 10 years. A floating rate negotiable instrument of deposit FRNID at the nominal value which an amount of not less than RM 100,000 and the multiple of RM 50,000 up to a maximum of RM 10 million. Maturity period at least 1 year up to 10 years. While instrument traded for Malaysian government securities. The tenure of MGS is normally medium to long term up to 30 years. MGS are fixed rate, coupon bearing bonds with bullet repayment of principal upon maturity. Coupon payments are made semi-annually. MGS are issued by BNM on behalf of the government. An annual calendar that outlines the timing, tenure and issuance method will be announced at year and for subsequent year issuance to enhance market transparency and certainty. The actual issuance will be announced a week before the issuance date. Typical issuances size ranges from RM 1 billion to RM 4.5 billion depending on the financing requirement of the government. For Malaysian Government Treasury Bills MTB, competitive auction, it means weekly basis on Thursday, traded on discounting basis. The question arising, is there any secondary market in these three instruments? Of course, yes. Okay, let us look into negotiable instrument of deposit NID. Repo. The first seller and the first buyer separately promise to repurchase and sell back NID at the agreed price and future date. Outright sale and purchase. This will cause the seller to transfer the ownership of NID to the buyer without the right to recourse except for this issuer. The issuer purchases and redeems its own NID before the expiration date. This will result in NID liquidation in premature. For Malaysian government securities, it as secondary market. The secondary market for benchmark securities is liquid with average transaction volume varying from RM 100 million to RM 500 million. A standard transaction is RM 5 million per lot. While for Malaysian government treasury bills MTB, yes, in the primary market MTB are issued through the weekly tenders via the principal dealers. In the secondary market, MTB are also classified under bond trading.
My name is Kasturi. My matric number is 259068. I'm going to present about where and how can we access to this instrument. For negotiable instrument of deposit, we can access NID by repurchase agreement or sale and buyback agreement. In this, the first seller and buyer respectively undertake the repurchase and sell back of the NID at an agreed price on a specified future date. For the Malaysia government security, we can access by buying almost any bond at, at your brokerage or local bank. The broker will charge a small commission for the bond and also mark up the bond price. The customer can clarify with their broker before confirming to buy it. The bonds are issued by the government, and for the Malaysia government treasury bills, we can access by bidding auction, which is a process of buying and selling goods or services by offering them up for bid, taking bid and then selling the item to the highest bidder, or buying the item from the lowest bidder. The next one is electronic trading platform. In an electronic trading platform, also known as online trading platform, which is a computer software program that can be used to place orders for financial product over a network with a financial intermediary. The next slide is about how the instrument used in a bank asset for the treasury operation. FINID is generally traded in secondary market on the following basis, which are outright sales and purchase, which result in the transfer of ownership of the NID from the seller to the buyer without resource other than to the issuer. The second way is purchase and redemption prior to maturity date by the issuer of its own, which result in the premature liquidation of the NID. Other than that, the next way will be repurchase agreement, where the first seller and buyer and respectively undertake the repurchase and sell back the NID at an agreeable price on a specified date. For the Malaysia government security, it can be used as coupon-bearing long-term bond issued by the government to raise funds for development expenditure. These are the most actively traded bonds. The BNM regularly issues 3-year, 5-year, 7-year and 10-year MGS as benchmark security for the development of the yield curve. And in addition, 15 years and 20 years has also been issued to lengthen the curve. While for the Malaysian government treasury bills, these instruments are usually issued by BNM for the government working capital requirement. MTB are issued with the original maturity of 3 months and 6 months and also 1 year. The bill are sold at discount through at competitive auction with original maturity of 3 months, 6 months and 1 year. It's also tradable on yield basis based on bonds of remaining tenure. The next slide is about how the instrument used in a bank asset for the treasury operation. FINID is generally traded in secondary market on the following basis, which are outright sales and purchase, which result in the transfer of ownership of the NID from the seller to the buyer without resource other than to the issuer. The second way is purchase and redemption prior to maturity date by the issuer of its own, which result in the premature liquidation of the NID. Other than that, the next way will be repurchase agreement, where the first seller and buyer and respectively undertake the repurchase and sell back the NID at an agreeable price on a specified date. For the Malaysia government security, it can be used as coupon-bearing long-term bond issued by the government to raise funds for development expenditure. These are the most actively traded bonds. The BNM regularly issues 3-year, 5-year, 7-year and 10-year MGS as benchmark security for the development of the yield curve. And in addition, 15 years and 20 years has also been issued to lengthen the curve. While for the Malaysian government treasury bills, these instruments are usually issued by BNM for the government working capital requirement. MTP are issued with the original maturity of 3 months and 6 months and also 1 year. The bill are sold at discount through at competitive auction with original maturity of 3 months, 6 months and 1 year. It's also tradable on yield basis based on bonds of remaining tenure. Then next is there any official guideline regulating this instrument? Finally, the guideline that applicable are ringgit and foreign currency NID issued by commercial bank and merchant bank are licensed under the Banking Financial Institution Act 1989. The banking institution also must ensure compliance with all circulars, guidelines and also regulation by Bank Negara Malaysia and guideline issued by the Security Commission of Malaysia. It also revised by BNM and the new guideline is published on 15 June 2006. For Malaysian government security, the guideline will be the Malaysia Code of Conduct for principals and brokers in the wholesale money and foreign exchange market and issued by Bank Negara Malaysia. Malaysia government treasury bills guideline will be the Bank Negara Malaysia and Security Commission. Sharia Advisory Council is also one of the guidelines. It ensures all Islamic capital market products are in compliance with the Sharia principle. The final slide will be who are the regulating agency. For NID, the regulating agency is a licensed financial institution which is a member of Rentas and approves the bank as an interbank. All the settlement rate in Rentas must be made in ringgit. In the other agency will be Bank Negara Malaysia, Commercial Bank and also Merchant Bank. For Malaysian Government Security, the regulating agency for this instrument is Security Commission. The Security Commission is responsible in rule making, ensuring sustainable market growth, development, and enforcing regulation regarding the capital market and supervising capital market activities and market institutions licensed under the capital market. Finally, for the Malaysia Government Treasury bills, the regulating agency for this instrument is a licensed financial institution which is a member of Rentas and approved by the bank as an interbank money market participant. The other agency will be Bank Negara Malaysia and also Merchant Bank. Thank you.